It's Friday the 6th of September. I'm here at Jazz FM Studios to record this week's Market Insights podcast with Jonny Hart from the Business Breakfast. This week we discuss all things Brexit, we talk about Italy, we talk about the US-China trade war, and we preview the upcoming week in the markets, including interest rate decisions from the ECB and the Turkish Central Bank. Don't forget to like and subscribe, and please enjoy the podcast.
You're listening to the OANDA Market Insights podcast. Each week, we review and preview the big markets and business stories with OANDA Senior Market Analyst Craig Erlam. And it's a very good morning to Craig. And what a surreal week it has been. Something to tell the grandchildren about, no doubt.
Yeah, I mean, we've talked a lot about the embarrassing weeks that Theresa May's had, and I think it's been underplayed, really, just how many defeats Boris Johnson suffered this week. The only thing which maybe makes it less bad as far as Boris Johnson is concerned is I fully think he went into this week expecting this week to play out pretty much exactly as it has. I think this is all part of the master plan to lead the country into an election that's going to be the people versus the elite and the people who want to deliver Brexit versus the people who are trying to block Brexit. And he's given the opposition and all rebellious MPs within his own party the opportunity, effectively the noose to hang themselves with, as far as he's concerned.
He's lost his brother Joe, but don't you think he's lost his mojo? Been waiting for that.
Yeah, I feel like you've been either waiting to use that all week, or
honestly, I just came up with that.
Yeah, if we listen to a few other shows, I imagine we'll probably have heard that once or twice already.
Let's not get too involved in the political ramifications of this discussion, and also concentrate on business and markets. I mean, what are markets thinking at the moment? It's been a fairly bad week for the pound, although a bit of a recovery when it looked as if, and still looks at the moment, as if no deal is not going to happen.
Yeah, I mean, at the start of the week, it looked as though it was about to turn a little bit sour again, and it seemed that almost there was no positive outlook. It seemed for this week. Even an election, there's obviously always these suggestions come back that even if Corbyn got a victory, even if we defeated no deal, then the markets don't like Corbyn either. So it's almost like there was a no positive way out of this situation.
But even markets are saying that Corbyn is better than no deal. So it looks like there's going to be a rate cut via the ECB next week. It's certainly on the cards, and there is a threat of recession in Europe. And we have mentioned this thought that there is going to be a recession here as well, because the latest numbers coming via the services sector, etc., aren't great. So you think next week ECB rate cut 100%?
Yeah, the markets certainly think so. So the markets are priced in 100% chance of a 0.1% rate cut. I mean, from my perspective, what's the point? What's the point in cutting rates by 10 basis points? What difference is it going to make? Symbolic is all it can be. But when you're in negative territory, everything comes with a risk. It's not like you're cutting from 2% to 1.9. You're in uncharted territory and negative rates. And I just don't see the point personally. I think they should be looking to be more ambitious with another package. And it feels like this is, if they do cut interest rates, it's more to appease the markets than it is for anything else. The question for me is, do they announce any other measures? Because there's speculation that they could be looking at QE again. They could be looking at ways to manage the tiered deposit rates better, which is the negative rates and the negative impacts it's having on banks, a way to manage that better. It's a question of whether they just go with a rate cut for now and wait maybe a month or two. Because remember, Christine Lagarde effectively takes over the ECB in November. Will they want to save the big stimulus package for her first meeting? Maybe not. They didn't previously, so there's no guaranteeing that they will. But I think these big packages, especially this late in the day when they've already experimented, they've already almost exhausted many of these options, it's probably going to take a lot of time to put together. But I guess we'll see next week. At the very least, they have to deliver now those 0.1% rate cut, because the markets are fully priced in, and they haven't suggested that the markets are wrong in doing so. On the data itself, yeah, as you've alluded to, we are seeing weaknesses. All of a sudden, people are talking, well, maybe actually the UK is heading for recession. We spoke about this previously when the second quarter figure was released. It almost felt a little bit fake because of the stockpiling effect. And we were saying that the chances are we'll see stockpiling in Q3 again ahead of a potential no-deal Brexit, which will give a boost to the economy. We'll also see just the economy average out. The first and the second average out. One is a strong growth figure, the other's a contraction figure. And the reality has actually been that we're not seeing the same signs of stockpiling again.